Hello everyone and welcome into the channel. I'm Brent and welcome to Investing on the Go. We're going to dive into some recent significant downturns in the US stock market, including the S&P 500, the Nasdaq, and the Dow Jones as of March 10th, 2025. We're going to go ahead and explore some factors contributing to the decline, such as the escalating recession fears, recent tariff announcements, and kind of go from there. So again, if you find this content valuable, please subscribe, hit that thumbs up button below. Your support enables me to continue to bring in you guys timely investment insights. So with that said, let's go ahead and get into the video. As many of you guys out there were probably watching the market today, the S&P 500, the Nasdaq, and Dow Jones all sold off, all within 2 to 4%. The Dow Jones losing over 900 points at one point before recovering in that last hour of the day, just a smidge. But that Nasdaq got hit pretty hard there, down 4%, and that is because of a big player out there that has been on the news quite a bit. So one article and one thing that really dragged the market down really heavy this morning was the Dow Jones fell by 900 points in market after Trump says that he won't rule out a recession. So earlier today, there was a bit of a discussion that led to this widespread market sell-off. Here we could talk a little bit about how the market plunged while the tech-heavy Nasdaq dropped over 4%. We'll talk about why there's a big difference between the S&P and the Nasdaq plummeting over 4%. But the major factor here was right here. The widespread sell-off was mostly driven by anxiety after the impact of Trump's tariffs. In an interview that aired Sunday, Trump said that the US economy would see a period of transition and refused to rule out a recession. While many people do not like a recession, there's a lot of money to be made during market downturns. So, when asked on Fox News Sunday Morning Futures with Maria if he was expecting a recession this year, Trump said, "I hate to predict things like that. There is a period of transition because of what we're doing is very big." So the tech and other indices all slid between 2 to 4%. S&P 500 now closing down 8.6% and having its single biggest day loss in the market as of 2022. I believe I have another article here pulled up. Yeah, so I also want to kind of cover this one here in a minute, but I thought I had something else in there. We'll go ahead and cover the Magnificent Seven stocks, and we'll take a look at their performance here on the day and where they're traded at now, above 50 or below the 50 200 day, right? So President Trump's comments not necessarily taking a recession off the table, unnerved investors who were already unnerved. So we already know that there's going to be a lot of uncertainty in the market. It's expected, but the fear and greed index actually fell to the lowest point now that it has been in several years, down at a 14 scaling here. I believe last time when we did the video, it was slightly higher at 19 or so, but this has definitely fell off the rocker there. So another article I wanted to kind of chatter about was Warren Buffett's famous investing advice: be greedy when others are fearful. I do believe there's money to be made. I still believe that the market will hit that 10% threshold into the negative. I'm not sure how much further below 10% we will go. We're going to take a look at the Magnificent Seven. But before that, I wanted to go ahead and take a look at Warren Buffett's two ticker symbols. One that actually is fairly close in value, like the dollar wise that you can purchase it at, versus something like VU or SPY. So here we have ticker symbol BRK.B, which is the Berkshire Hathaway's Class B shares. These on the day were up 0.3%. Let me go ahead and bring in VU stock. So VU stock on the day is down 2.64%, whereas Berkshire Hathaway is up 0.3%. Take a look at VU over the last month. It is down 7.39%. Here, as of those highs, it is down 8.56%. If we take a look at the exact same day here on February 19th, from 1 month, let's go look here, February 19th, we'll see that the Berkshire Hathaway is up 2.76% in this same time frame that the rest of the market has fallen. The Berkshire has actually gone higher. If we take a look at the year to date for the VU, we're now negative year to date by 4.08%. And here with Berkshire, it is up 10.2%. Now you might say, hey, VU over the last 5 years is still up over 100%, and you are true. It is up 108.17%, but in that same time frame, Berkshire Hathaway is up 153.11%. So a lot of that's not the article. A lot of investors are pointing here recently. I've seen a lot of videos and investors are talking about Warren Buffett as he's currently holding the largest position of cash that he has had, and it is much more than any of the stocks of U.S. stocks. So the Berkshire Hathaway currently has a huge cash position that is more than its ownership of U.S. stocks. They put it much better there. So again, he just wants be following the first part of the adage there, the advice here: be fearful when others are greedy. Right now, everyone was very greedy at all-time highs, piling money into the portfolios after 2 years now, 3 years of just straight incline in the market. So a lot of investors have been seeing that Warren Buffett, he's been really cash heavy. And while I think it's good to be some sort of cash heavy, don't be overly cash heavy, because in that same time frame over the last 2 or 3 years, the market here, if we go look at 3 years, we increase it 3 years, they still would have got up a 50% increase. And here there's another 50% increase, right? So take a look at the 5-year period, it's up 108%. So holding cash while you're waiting for it to drop can be negative. And this little drop right here, when you look at it over the long term, there's been drops like this in the past. Remember 2022, we went down nearly 24% in a period. I don't think this is the same case. Tariffs is really affecting everyone's uncertainty, the market here in the short term. And Doge is going through the next 6 months and thinning out jobs, unemployment, right? That's on the rise. And that has, unemployment we talked about ticked up to 4.1. So there's a lot of uncertainty here in the short term, but I don't feel that it's in the same threshold as this. Here we know what's causing this right now. We have tariffs, high interest rates. They're kind of coming down, but we need them to come down further. We need a reasoning for that. So here's that reasoning for that. It just needs to move down further, right? So here's the timeline of tariffs that are kind of taking effect with the US and Canada. There was a recent one that, let's go ahead and chatter about it. So here, March 10th, Trump's suggestion that there was a possibility of a recession in a Fox News interview is cited as causing investors fear and decline in the S&P 500. Trade tensions are listed as one of the factors contributing to one of the worst single-day market sell-offs since 2022. Since its peak in February, the S&P 500 has lost $4 trillion in the market sell-off. So we know what the issue is right now. It's this trade war that's taken place. There's a lot of back and forth, but eventually it'll get resolved. People, right now there's some stuff going on in place, but eventually they'll make some agreement and the market will move higher. So right now there's a lot of uncertainty. We don't know how long it's going to take place. We don't know what will happen in the end, but when something does happen, when there is an agreement, when people stop going back and forth and trying to threaten each other, eventually it'll all be behind us and the market will move higher, right? It's not where we don't know what's affecting the market. Why is the market going in the red? Why is it down 10%? Why is it down 20%? We know why it's happening. We're just waiting for that resolution and then certainty to come back into an uncertain market when we have dates and stuff fixed. Also, we have the continuation of Meta, Google, Salesforce, and other company layoffs here in 2025 within tech and other companies. So the big tech layoffs of 2025, Meta laid off 3,600 employees. Google has an undisclosed amount. That's usually several thousand. Salesforce has over 1,000 as well. And then there's a whole bunch of other major layoffs here in 2025. I'll go ahead and slowly scroll through here as you take a look there at some of those companies there in the short term. So yeah, we have tariffs, um, layoffs, and just back and forth that's taking place here in the market. Plus, if we take a look at the S&P 500 on the daily, oops, I didn't mean to click that. On the daily, ooh, what did I hit? S&P, there we go. We see that there's a lot of red out there. So we're going to go ahead and cover some of these companies right now. We're going to take a look at the main 7, including Nvidia. Tesla down a whopping 15.43% in a day. In a day. This puts Tesla year to date down almost 50%. That is insane. Can you imagine having bought Tesla at the end of 2024, going into 2025, thinking, Tesla's going to be great for my portfolio? This is why the NASDAQ has been hit so hard today on Monday, down 4%, whereas the other indexes were down 2%. Tesla did that. Tesla went down that nearly 15.5%, 15.50%, taking the NASDAQ down with it a little bit further, right? Microsoft down 3.34, Nvidia down 5.07, Apple 4.85, Amazon 2.36, Google 4.52, and Meta 4.42. We see Costco and Walmart continuing to be red as well. Costco was down huge on Friday. I believe it was down 6 to 8% at the time. Financials got hit pretty hard as well. So yeah, there's a lot of red. So I believe, let's go ahead and punch in the price, 200-day, 50-day. I want to take a look at these again because there has been a lot of movement now on Monday. Much more movement today than last week, right? We had 5 days last week where the market were up 2 days, Wednesday and Friday, and 3 days of negative. But today alone on Monday, the markets fell down further than what they had done last week alone. So, throughout the day, right? It did recover towards the end of the day, kind of putting it up higher a bit for last week's, but all in all, just it's a huge day today. Let's go look at the 3-month here, maybe 1 month, 1 year, and we can see here Meta, Apple actually fell down very quickly. So whereas I said, you know what, Apple's doing pretty good, but it did drop. It's going to have a hard time breaking above that 50-day. It's going to use that as resistance. Well, it didn't even use it as resistance. It just took off and went down straight to its 200-day and is testing this level. So this is in the same level now as Google and Amazon was on Friday. And now, if Apple breaks through this 200-day moving average, if it breaks below there, it could travel all the way down. Looks to be about 200 to 190 before it could slow down. So Apple, I am holding, I think Apple may be my single biggest individual company investment. I would like to transition out of Apple. Apple has done really well for me in my portfolios over the last few years, but I believe I want to transition that company into something else. Meta had another big down day today. We saw, let's see this in. Meta went down 4.42. So Meta 4.42. So here's that 4.42%. Let me go. Yeah, this is fine. This is fine. They still have a bit to go before they're touching that 200-day moving average, but this could be touched within the next 4 days. So Tuesday, Wednesday, Thursday, Friday, if the market continues to fall, which I believe it will, there's a lot of pressure to the downside till we get below that correction level of 10% before investors will kind of buy back in. So here we're at 498. So Meta, I feel like it's still good. It's decent, but it's in a better position than most now. Google, as I had said, it had a hard time. It was below that 50-day, below that 200-day. I was explaining that 200-day is now going to be acting as resistance to break above it, but it's not even trying to retest it. Google here fell. Not only did it fall back down to retest, it actually, let's go 3-month here, it actually fell below its recent low. Here it hit a recent low early in March. It hit another all-time low for the year of 167.18. Generally, this is like a downtrend here. You don't want to be invested in these because you don't know where it's going to stop at. Google could continue to downtrend all the way down to 150. So Not sure on the percentage change there. I would be Google's one of those ones that I am interested in buying. So is Amazon. I think I would enjoy. I don't know which one I would enjoy more. I think Amazon would be much more enjoyable for me. But I would like to buy into either Google or Amazon. But yeah, we do see Google dropping below. It's not going to be retesting 177 here in the short term. I believe it'll still go down even further, probably even touching 150 here in the short term. Amazon, we saw yesterday or Friday that it had been above that 200-day moving average. And I said we want to watch it to see what takes place. If it does break and close below that 200-day, it's going to have a really hard time coming back up as it'll hit resistance at 199. And as of today, it fell down 2.36% today, putting it negative, putting it into the putting it down below that 200-day. So now it's bottoming out period here. Could be anywhere from 170s, 180s, 170s to all the way down to 160s potentially here in the short term as Amazon continues to sell off. There's nothing right now telling it, hey, stop right here. You got some support, right? That support level was at that 200. So if this continues to trade down, we don't know where it'll actually hit. I'm interested in picking up some Amazon. I bought Amazon back in the old days, back before it had a stock split. I don't know how many times it split, but it has definitely split a few times now. And I'd be interested to buy back into it. Nvidia, as we kind of discussed, it was well below its 200-day on Friday, and we didn't know when it would, where it would bleed out to. So I said it could bleed out even as low as $80 a share. And this is trending down to now 106, which kind of retests these 2024 dips. So we'll see how this kind of plays out within the next few days. I don't see it recovering this week. I still see this week as being, it could be a dead cat bounce where we make some sort of an uptrend. But here, there's going to be a death cross here taking place very quickly. And this could, if we look over the 5 years, when these death crosses take place, they may show signs of recovery here in the short term. So this might show some signs of recovery, but eventually that death cross will take place. That'll put a lot of downward selling pressure and could really push it down $80 or $40 here in the future. I don't know where I would see the video short term, but I guess the future will tell, right? Tesla, 50% loss nearly year to date. Just all in all, especially after his interview earlier, I was watching it where he was discussing how everything has been Doge, and he said that, he feels he's doing a good job, fraud and all that. He's got 6 months to do all this, and that has a lot of uncertainty in the markets and how there's been a lot of repercussions towards his company, Tesla, and how investors, stock owners, and have viewed the company in major sell-offs, plus with crime taking place in different areas of the United States, either burning the recharge stations, taking shots into buildings and such, hitting monitors, from what I heard. And then in his interview, they had asked him, how are you doing with your companies with Tesla? And he didn't really look too positive there, looking very grim. So Tesla dropping down 50%. It could even continue to downtrend even further, touching as low as 150 in here in the short term. There's really no end in sight. Right now, it's kind of feeling like it's getting some support here at that 221. As you kind of see here, mid 2024, it was around 221. But that recent incline, wow, I can't imagine having purchased Tesla anywhere in this time frame here. You would be sitting on a huge loss. So anybody out there holding Tesla, let me know down in the comment section below. I would like to hear your guys' feedback of how you're handling your portfolio. And then the last one here today we're going to be taking a look at is Nflx. While it's not really part of the Magnificent Seven, I still would like to kind of showcase how these death crosses do take place and how they are signs of negative in the future. They are very good signs of what will take place. Here we had that death cross and the market sold off. Here, Nflx is trading at 866. It has came down quite a bit. I'm not sure if it'll hit that 779 myself. I think Netflix does really well. They have a really subscriber base, right? So while companies out there could be, everyone's going to enjoy Netflix. I'll say that. So I don't have anything negative to say about them. They're not in the news doing some crazy stuff out there. So nothing political there for Netflix going on. So I think of all of these, Meta was the best, handling it the best, right? I think Apple was still above that 200-day moving average, but within the next few days, we'll see if this holds or if it'll break. I would like to move my positioning out of Apple and either into Google or Amazon. I would like to see Google drop and Amazon drop. Google, I'd like to see hit 150. I don't know if I'll actually see it at 150. There were several times here where they had a death cross and they escaped it. And then Amazon here, yeah, kind of in the same boat, but they didn't cross. They kept it going. Here they cross. You see that death cross. 50 went underneath that 200-day, led to that sell-off. Here, golden cross and huge increase. We're just kind of looking for these little marks in the market. But as of now, you can see the video. I'll be very cautious holding on to this one, especially after this downturn. If you're in NVIDIA now, probably take some profits there. So let me know down in the comment section below, guys. Are you holding on to any specific companies individually, or are you holding on to ETFs that track the major markets? NASDAQ or SPY, S&P 500 or Dow Jones, right? Let me know down in the comment section below. What are your guys' thoughts after today? Do you think the week of 10 to the 14th will be more positive or more negative after Monday's sell-off? Let me know. I would really appreciate to hear back from you guys, and I will see you guys in the next video. Bye-bye.